buying power of cash and fiat is contracting at an escalating rate. Do not be caught with too much money in the banks. That's our big thing. Stay out of the debt markets. You have probably too much of it in your pensions. Try get out of those assets. It's in terminal decline.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 20th through May 27th, 2024 while supplies last. First, we feature pre-1933 XF $20 gold Liberty coins at just $25 over a 1-ounce spot. We also have backdated silver 1-ounce Philharmonics at $3.15 over spot. And finally, we have the hard-to-find silver half-ounce Canadian polar bears at the very competitive price of just $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Francis Hunt, the market sniper. Francis, thank you so much for joining us today.
Delighted to be back with you, Elijah.
Well, it's great to have you today. We're recording this on Monday, May 27th, in the morning here, Eastern time. So we do really appreciate you taking the time here. I know from across the world here, it's great to have you. And I did want to discuss kind of what we're seeing in the precious metal markets. I guess it was, a week and a half ago now, silver broke above that critical $30 level, and it's really held that level. Even this morning, we saw silver back above $31. So your take on where we are right now? I know a critical chart that you've been paying attention to and we've been paying attention to is a gold-silver ratio. And we've seen that break down over the last week or so. So can you share with us kind of what that is signaling?
Yes, 100%, Elijah. In fact, it's one of the key triggering events we gave you that we're looking for to see fall. We're looking for the gold-silver ratio to surrender this dotted basing ascending grind line, and we've been talking about it many times, and it retained or managed to sustain itself continually in this grinding up channel. And we said two things: it should give up to the downside, and when it gives up to the downside, it should fall in a fairly disorderly, quick manner. And apart from the 75 level, which we drawn in faint blue over there, the next major level is 65. And it's kind of interesting because that's exactly what it's done. From last week and the week before, I believe it was, let's just draw that again and drop the time frame to the daily. You can see that we were actually at 88 at our midpoint of our channel over here. So if I circle it for you, that's roughly the midpoint of the channel. And you can see we tapped out there. That's 88. And next thing you knew, we traded through the 75 on the gold-silver ratio, a really abrupt, disorderly break, which is just how breaks should occur. And the rally was only able to do a rising wedge up to our midpoint before rolling over to die. And more importantly today, because we're talking right here and now, is that despite only making it back up to the 78.2, today's price behavior of silver versus gold is seeing us make a new low. So we're now trading down through the 75, Elijah. It looks like we're ready to let go of that one other key number, 75. And as I explained on the bigger time frames, the next level that becomes of interest to us, and often you cover the open territory in quite a disorderly fashion. We've already seen how steeply it's gone down from the 88 down to here. You've had a weak rally. Now, it doesn't have to do it as quickly, but there's a possibility it could. You could find yourself down running a number less than 65 before we get some form of a rally up. And that's exciting because I could see silver potentially then being through the 30s and possibly in that 40-45 range, which is that key gateway to the long-term 50 resistance on silver to the dollar.
Did you want to share with us then the silver chart here? Because I know we've sustained that $30 level for about a week and a half now, which seems pretty critical. And we could be on for explosive moves to the upside. So what kind of price points are you looking for right now?
Yes, great question. And I think it makes absolute sense to go straight back to the silver chart and have a look at it. So this is on a very big time frame. I'm going to throw out some of the big numbers that should make many people hopefully smile. So it should be full of good news today, Elijah, in terms of silver. With that triggering event on the gold-silver ratio, if we look at the multi-year, the multi-decade that goes right the way back to the 79-81 bull market, this, and many people, traditional technical analysts, will be saying there's your big cup and handle. I've heard many refer to it over here. Many people talking about the sort of rim or the lip, if you like, being at that 45 through to 50 level that everyone's waiting to be broken. But for us, you've already triggered your third relative high over here. So this is actually a triggering event. We like to be early. We don't want to be chasing in when everyone else is chasing in. And technically, this is very, very bullish. That's, I would call, our first and original high. That's our truncated one. That was the 2011 bull market that was part allowed to run. And this is our gold made 2021, and silver fell to 11, but then made the Wall Street bets high of just through the $30 mark. So these are those three highs, and we see this as a triggering event of that localized high. And we talked to you about three highs and then the fourth being relevant. Hence why we say once, twice, three times, and then a lady. And so this is a very significant candle for HVF method people who want to be in early. And this is a triggering event for us right now. And it's at 31.53 at the moment. It certainly seems to be building a very strong foundation. So your question was, is the 30 support now? So let's just clean our face and revert back on the lower time frames. There was the break of the capping descending grind line. That happened a while back. And now we've had the gold-silver ratio break. And now we've taken out that Wall Street bets high that was 2021. And it does seem to have had just one red candle. We're only in the first day of the new week, Elijah, and that's a pretty strong rebuttal. If I take you into the daily chart and just have a look at that, we've returned, moved, we've kissed the previous high. So what tends to happen technically is a legacy previous high is broken with momentum, then turns into support, gets the return move visit, which has occurred, and is now showing quite a bit of stamina to revert back to the upside. And in fact, a lot of the vigor in the precious metals market is now in platinum and silver, and gold is a little bit more docile and a little bit more chilled, which is an important part of the second stage, the other precious metals starting to outperform. So silver looking really, really good, and I'm excited, and I think that the 30 round number dollar mark is now a localized support zone.
Now, for those thinking that it might be too late to jump on the train here, did you want to share with us the inflation adjusted chart using the CPI?
100%, yes, I do. Don't forget, we've been blighted by inflation. I think you're very conscious of that. I don't need to remind you. And if we do a consumer price index for all urban consumers, this is a stateside number. So while I'm not in America, I'm talking American stats on the silver market for you. And you can see this truly is just getting going. Elijah, for us. You've got three localized highs. The biggest one for its time, for where the inflation index was back then, was, of course, the 80s. I've always maintained that the 2011 bull market was actually stopped in its tracks. It wasn't allowed to play fully out. So for me, this is a half bull. And then the most recent just trot up to the 2K for gold during 2021 post the events of the stimulus of March 2020, and silver's dipped to 11 and then run up to here. When you inflation adjust this is truly just getting beginning. There is so much. Just to get to the 80s level by multiple, there's quite a degree of overperformance. Just so that you know, this is literally 0.1, and up top here you're at about 6 as a number. So don't think of the meaningfulness of the individual number so much, but just look at the multiple you would have to do to get there. Inside of the fact that the CPI will continue to do devaluation and will keep coming. So whatever that CPI rate is, silver, the high of the 80s is 0.61, and you're barely at 0.1. So that's another 6x of the inflation rate. that you're going to. So it's going to have to beat the inflation rate by 6 times to get to an equivalent level of the 80s. And I expect that it's going to outperform the 80s high. So for me, this is the long-awaited real mega bull, for which, in fact, the original 2011 may just have been the first leg of a 5-leg move. And what's typical in Elliott wave is wave 3 is by far your largest as well. So there's a lot of reasons to be very optimistic as a silver person, and to not believe that you are too late. My assessment is everyone should participate in this, and buying at $30 is seminally, on an inflation-adjusted basis, still very cheap. And this is going to start to be very interesting for the miners in due course once we continue to maintain these price levels for an extended period.
Now, you mentioned how the first move is in gold, and then we also see moves in silver and platinum. We have seen platinum above the $1,000 level for a little while here. Your take on platinum right now and where it could be headed in the future?
I do like platinum as well, Elijah. I don't particularly like palladium right now and some of the others more exotics, but I do like platinum. So if we clip over to bring in the platinum chart, I want to highlight that platinum has suffered from an underloved syndrome that has been quite extensive. If we go through to the monthly chart, so we always start on the big time frames and bring it back down. Let's take a couple of interesting drawings off just so we can just see the purity of the price chart there. So in actual fact, platinum way back in 2008, people forget it traded $2,300. And when I do, one thing I will do to make the case also for platinum is I'll do a gold relative to gold as well. So I do actually think platinum will outperform gold. And it's probably, with silver, my favorite too. Of the PMs now. That doesn't mean gold bad. Gold is going to do exceptionally well. It just, the whole complex will do really well, in my overall opinion. And I think platinum from here will start to outperform gold. This is how technically we carve this one up. It's literally, 08 was the peak. It's literally till 2020, which was, again, I keep defining 2020 as the big pivot event of hyper undervaluation and hyper overvaluation. And it's no shock that the debt market peak in valuation coincided with the stimulus and the March 2020 events. That was a major turning for the bond market. And as the debt and currency is now in its lockstep devaluation on an ongoing basis for an extended period, we're going to have stubbornly high rates, yet in spite of supposedly rates being bad, physical assets are going to go up immensely, particularly monetary commodities. I'm a little bit more cautious the energies of the commodity section. I'm bullish the softs as well and many other things. But just because the consumer is going to be a little bit crushed, the energies might lag a little bit. The monetized precious metals commodity side is absolutely a sweet spot, and platinum broke out of this falling wedge, but then it disappointed. It's entitled to a return move, but it broke out after the extremities of 2011. It came back and it's been zigging and zagging a little bit. We feel it's now getting on its bike and getting ready to go, and I'll show you that chart in a lower time frame for it to be better appreciated. And we feel 1,500, and this is also first set up in a new trend. So I'll put a draw on here for you, and that'll highlight our targets that we are anticipating to come with platinum. And that is way up at 1,584. And as we say, our first setups in new trend overperform. So we would only do a partial close of a leverage trade here, and we would allow it to continue to overperform on a slightly smaller reduced size after a profit take at 1584. So we think it'll smash that. It'll probably have some pullback and a little bit of churn, but continue to go on up. So that's a little bit on platinum versus the dollar, just to highlight and make the case for platinum to finish the narrative, I suppose. It's also worth looking at platinum in gold ounces as a relative valuation. Obviously, we are already very pro gold. I'm going to just do that with the gold futures. So we'll stay with the platinum there, and I'm going to divide it by the gold futures. And if you have a look at this chart, relative valuations as well, Elijah, wow, what a story, gold versus platinum. Platinum is about 30 times rarer, I'm told. In other words, above ground platinum is significantly less. Currently being mined about 190 tons a year. I wouldn't say gold's output is 30 times that, but above all platinum apparently mined above ground, there's 30 times more gold than platinum. It is super, super rare. If you look at these levels, that's typically 2.4 times. So you would need 2.4 ounces of gold to buy a platinum ounce. That's an incredible amount. So it highlights the relative value. But because of the exhausts, the battery, the ESG game, palladium shot and platinum was punished, so the industrial use for platinum was pulled largely quite substantially because of ESG, and we're seeing a little bit of that reverse now, and palladium did exceptionally strongly during that period. But for jewelry and as a rarity and its unique properties, this looks like a double bottom over here and quite a strong rejection. And this is very low values. You only needed 0.39 of a gold ounce to pick up a platinum ounce. And we see this turning and this relationship coming more back into the more middle of the range. We see it as extremely relatively unloved compared to gold. And the potential for it, given its scarcity, to get up to 2.5s and 2s, and in an extreme moment, possibly even beyond. And in most instances, when it's been on the super undervalued, it's turned violently to the upside as well. I'll do one more if you'll allow me, and that is the palladium. Because of palladium kind of being in the same family and also benefiting from platinum's weakness, if we do these two, again, we've done exceptionally. There's been an exceptional period of undervaluation of platinum to palladium since 1998, and this seems to have just begun a little bit of a turning and a turning up. But typically, platinum to palladium, you were about 5.5 at its extremity high, and down here you're below 0.5, and we've just crossed the 1. And the aggregate here for this area is probably about 2.5 times. So you're looking at palladium doing probably 3 times to 4 times better than gold and palladium over the next leg, if it's to return to mid or even extremity highs. And markets tend to move from very undervalued, underappreciated moments into very strongly supported moments. So the last time it was super undervalued, for example, you went from around 0.5 and bang, next thing you knew, you're at through 5. So that means you've gone up 10 times in relative value. You actually went a little bit higher, and you've done an even worse down leg. So if we get a subsequent overreaction to the upside, you could even get 6, and you will have been from below 0.5 times. So something just to bear in mind. Some countries are still charging VAT because it's an industrial metal. I don't think the US is affected by that. So that's a cost you don't always want to wear. But if you're going to do 2.5, 3, even maybe 5 times on the extremity side, some of the other precious metals as movements, then it could be actually even worth it, even if you face a little bit of a VAT charge going in.
Now, when it comes to kind of the world that we'll see if we see these price valuations, I know you've mentioned how it's kind of maybe a bit bittersweet that we're seeing this rally in the precious metal markets. Your perspective on kind of the concerning developments in the economy and financial system that will go along with these price rises?
Yes, affordability of living, the quality of life for people in the West. Overall, the average Joes, and I don't mean anything derogatory in that, man in the streets, people that are not maybe financially aware, that are not watching your podcast and wondering what they should be doing about preserving values. Unfortunately, for the average person in the West, my outlook is that the standard of living is going to collapse immensely. We're going to go back to reusing things, living in old clothes, darning clothes, who knows what might happen. But the the quality of life is going to drop immensely. If you look at the total population and the average income and the amount of consumption that goes on, and you have China, India, and all these other nations, and then you look at the West, the number of people are far less, and the disposable income is much, much higher. And I unfortunately feel that there's going to be a great leveling. I'm sort of seeing this as a sort of communistic stamp on the bourgeoisie, and it's unfortunately going to mean higher taxes, very hard to get by potentially, high costs of living, cost of foodstuffs, and a lot of this consumption, this conspicuous consumption error that we've not even noticed anymore for being conspicuous consumption, changing your car every 3 years and upgrading the house and all of that, and living on debt and making, interest rate payments. I think that whole world is going to come to a grinding halt. And the people that will survive this well, who will preserve buying power, in spite of an ever-escalating underlying nominal number, are the people that have made strategic investments in physical things that are unencumbered by debt and monetary commodities such as the ones we've been discussing, which will outperform and will hold their own share certificates on metal miners, for example. Those people stand to do exceedingly well. There will be a lot more cheap labor and a lot more people closer to the breadline, I fear, in the post-Western world that we are likely to face in the unwinding of this massive contracting fiat and debt system.
Now, staying out of debt might be interesting, because if we see the currency crisis, wouldn't that devalue the debt? So can you expand on why you think staying out of debt is a good idea?
So when the debt devalues, the rates go up. And the ability to make payments then come under question. And what actually happens is, coincident to that, a major economic downturn takes place. So you may think you're good and you've got decent income and can even afford to pay double the interest rates, maybe even triple the interest rates in monkey money, giving it back and laughing all the way to the bank. But your clients won't be. Your business partners that you do business with won't be. The rug pulls on counterparty risks, the loss of assets, the potential bank devastations that could take funds out of people, the overall collateralized risk are going to make it very hard for one man to be an insular island of happy days in an environment where so much is burning. And unfortunately, if your entire neighborhood burns down but for your house, there's still a problem in the property market for you, because there's no one left to buy your property, and everybody else is scorched. And in that sense, we are all as strong as our society, and the society is going to get greatly undermined. And it's nice to be relatively wealthy compared to your friends, but if all your friends, peers are absolutely devastated, your ability to generate income and alpha will be greatly diminished, because who are you selling to? And unless you have products that are already selling in the lower income areas such as China, India, and Asia, where I see there will still be some downward pressure, but unlikely to be of the scale that the West, that includes Europe, that includes the UK, the Commonwealth, Australia, New Zealand, Canada, and North America. And unless you have already got a very dominant position in an emerging market with an easily affordable product that shouldn't be displaced, or you're someone in the food farming and food provision, where there's definitely going to be people that are going to need your product. I fear for most industries, a lot of these fluffy service industries, the derivative marketing, banking, legal services in City of London, a lot of those things that have become reliant on the financial engineering will start failing. That's going to run into the property markets in central London. It's going to run into the New York property market. It's going to, the Hamptons, all these collateralized, there's going to be contagion. And the loss of wealth and the loss of income there is going to be thorough. So it's not a time, I think, to lose your mind and to be overly flaunting your good fortune and wealth. Put it in gold and silver. maximize your income, always focus on living well inside your means. The residual turn into your precious metals, certainly, and your miners. Get your share certificates as well. And then also, keep it tidy, and maybe don't flaunt too much, because there's going to be a lot of people that are going to be hurt. And work on your local community and self-reliance in terms of food and energy as well.
When it comes to location, I know obviously people are moving to different parts of the U.S. I know you live outside the U.S. in multiple areas. So your perspective on that, kind of thoughts on relocation, is that something that should be on people's minds? And what are the factors to consider there?
It's a luxury, what I'm going to say now, and many people don't have it. So the last thing I want to do is antagonize your audience. But where possible, have not just a US bug out spot, which might be, in the middle states, in rural areas, etc. But if you can, start having some optionality outside of the US system, the US legal system. What would you do if they brought back conscription and it's crazy wars they want to pursue, and that's part and parcel of the controlled demolition of the economy? You might value having a residency outside in some of the nation states, unfortunately, that will do better than the West. Many people will say, I'm here to fight, and it provokes the buccaneer spirit. Sometimes some fights aren't worth having. And it's not popular for me to say that. And I can easily say this now because I was forced to leave my home for a number of reasons. And I realized the world is your oyster. And when you go as a tourist or someone, people treat you better than your home state. They want to attract your capital. They want to attract your investment. And because you are almost not a slave of their plantation, they have to seduce you, because there are other nation states that will also be very happy to have a high net worth individual, if you are that, who has precious metals and is ready to invest and do positive things. And the minute you're in that position, the fiscal things change. It's very hard to leave your own home, but I would say to people, develop optionality outside of the grand Western axis. There is nothing but folly, and unfortunately, the people at the very, very top are hell-bent on its destruction, as far as I'm concerned, and it is intent, not incompetence. It is intent. So you're essentially in a beautiful plane, but with a crazy pilot who's going to fly it in the mountain. And the fact that you right now have one of the most comfortable seats and you're in business class and you're being served the prawn sandwich doesn't mean that smashing the mountain isn't going to hurt and end badly for you despite that. And you might want to be in some people will think a Tatia plane, an older 737, but it's going to touch down and land and get you to a destination where you won't have those parasitic forces that seem hell-bent on destroying the finances of the USA.
It is concerning, and I guess slightly on a different topic, but it relates. As you mentioned, all the wars going on. We have two currently that the U.S. is involved in, and unfortunately, it looks like possibly a third here with Taiwan as tensions increase there. So, yeah, I mean, I feel like people might be considering relocation more than ever right now.
It is something to consider. I prefer the Southern Hemisphere. You can look at Latin America for those in Australia, Bali, Indonesia. Eastern Europe is a bit hot with the Russian-Ukraine thing. Outside of that, they've sort of seen this movie before. They're more pragmatic to the communistic overtures, and it's actually, if it wasn't for the Russian-Ukraine thing, it would probably be top of the list. You've got Hungarian Prime Minister that's kind of resisting a lot of the immigration is everything. You've had Slovakia, unfortunately recently shot, not overly keen on the escalation and passing arms to Ukraine. So if things settle down on the Russia-Ukraine thing, I don't think they are going to. I think that war is going to be kept warm. Generally, they're not a bad place. But while that's going on, I'm tempted by the Southern Hemisphere, I have to say. And it's kind of remote. And there's a lot of good places. But, nothing feels like home. But you can always visit. And once I left my home and I visited and I became call it as someone who had an international footprint. I've been better looked after, and actually my wealth building has gone better. You know, you're not feeding this corporate fascist that there isn't a single war or conflict it doesn't like the look of and want to participate in. And I take pride in not funding that. And, you know, it's hard as a taxpayer in the States to not think some of your dollars are going into quite nefarious agendas.
If our viewers are interested in learning more, where can they find you, Francis, if our viewers are interested in continuing to track this with you?
Our YouTube channel, The Market Sniper, is where we launch a lot of our thoughts, and also on X under the same name, as well as if you're interested in the role of crypto, although, as I say, captured it may be, there's still some participation that can be done. There's a YouTube channel and all of that as well. But what I would say, whether you choose, just follow and subscribe, have a listen if you like what we say. But we are going to specialize, and we continue to specialize in the preparation for what I see is the direction that we are being taken in, and that is a collapsing global, well, I want to say Western economy more than worldwide economy. And I do fear people need to have interests offshore if you are Western based. I understand if you have kids at school and all of this and you don't want to move and all of those things, but eventually the water, the boiling temperature of the water is going to continue to get hotter, and we specialize in helping people build and preserve wealth in what we consider to be reset times, which is going to turn into economic case history, I fear, for many centuries. But I want to also emphasize there's great opportunities that come with this. And the precious metal markets, the miners, and how you will build and grow, and you have optionality and residencies and places you can go to where if things get a little bit harem-scarum, you'll be able to see where's the best place to sit this out. And having that optionality is truly, truly very important. And we delve into that as well with our community.
Fantastic. Francis, we really appreciate your time today. Any last thoughts before we let you go?
No, silver is doing exactly what it should do. It's accelerating. Please build your positions if you haven't already. Keep an eye on platinum. And in fact, you're seeing an overall general commodity boom. Even the stock market will go up because of that inflation part of the stagflation. So generally things are going to go up, and it's going to surprise you how much by price, right away from most commodities. We have energies as last in the line, but even still in due course, those things will move. So watch that, and the stocks will go up, but hold your own certificates. Buying power of cash and fiat is contracting at an escalating rate. Do not be caught with too much money in the banks. That's our big thing. Stay out of the debt markets. You have probably too much of it in your pensions. Try get out of those assets. It's in terminal decline.
Fantastic. Francis, once again, thank you so much for your time, and God bless.
Same to you, Elijah. Thank you for having me on.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 20th through May 27th, 2024 while supplies last. First, we feature pre-1933 XF $20 gold Liberty coins at just $25 over a 1-ounce spot. We also have backdated silver 1-ounce Philharmonics at $3.15 over spot. And finally, we have the hard-to-find silver half-ounce Canadian polar bears at the very competitive price of just $2.50 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.